This is a special meeting. It's with the Auditor's Office. It's February 21st, 2023. The time is 11 a.m. I'm calling this meeting to order. In attendance are Commissioners Matari, Duncan, and Commissioner Brooks is joining us by phone. Are there any changes to the agenda? Okay. Hearing none, this is our external auditor presentation of our annual audit. And Finance Director Falcon, did you want to lead us off?
Yes, please. Thank you. Good morning, Commissioners. Brandy Falcon, Auditor's Office for the record. Today we have Barry Weber and Jacob Fox. Barry's our audit manager from Eide Bailly. They are here to give an overview of our FY22 financials. Keith and I have been very pleased working with Eide Bailly over the past several years. I was with Eide Bailly prior to the county, so I can say years. They've always been timely, professional, and help ensure the Auditor's Office is maintaining the county's finances in compliance with statute and accounting standards. Our audit partner, Jody, is actually the government accounting expert for Eide Bailly. She brings a tremendous amount of resourcefulness and advice to us. They also work with other governments in Idaho, such as Canyon County, and offer valuable insight into GASB pronouncements and implementation, financial presentation, and overall best practices. This year, our office is about a month behind where we usually are in the audit process. That is primarily due to the implementation of GASB 87, as well as staff shortages in our office this past summer. GASB 87 is a new governmental accounting pronouncement that was effective for FY22 and has changed the way we account for and present all of our leases. As you know, the county has a significant number of leases, specifically with our airport, and the BOCC approved the purchase of a specialized lease software for our office to implement this change. It actually did take several months of work by Keith and by our fixed asset accountant to get this system up and running and to import all of our leases. Secondly, as you know, this past summer, Keith had to temporarily step up as the interim finance director, did a great job, but we were unable to hire a new budget accountant until November. This turnover did cause some delays in planning our audit this year. However, everything has come together smoothly, nonetheless, and we're happy to see the end in sight for this year's audited financials. Once they are finalized mid-March, we're going to come back before the board for the assigned fund balance resolution, because we always wait on our financials for that. So I'm going to let Barry take it from here. Thank you.
Yes.
There we go. Thank you, Brandy. Again, my name is Barry Weber. I'm a senior manager at Eide Bailly. This is, I think, the 6th or 7th year we've been on the audit. Jacob Fox is also with me. He's the in-charge on the job. We like to kind of give this report, give you guys an idea of what it's going to look like when the final financials do come. We're in the midst of reviewing the ACFR right now. Everything looking very clean thus far. So we do expect a clean opinion, an unmodified opinion is what it's called, which we've had every year since we started the audit. There are the kind of two big points I wanted to bring up for this year. The first obviously being the leases. It is a pretty significant change. So there's going to be a significant change from looking at last year's report to this year's report. As far as the financials themselves, effectively leases say that this is a legal commitment, so we need to bring that on as debt, or in the airport's case, as a receivable. It's a debt from those people that have made that commitment. So what it tends to just result in is a big gross up of both assets and liabilities. So that's going to look a little different when you look at total assets last year versus this year. It's going to be a lot more this year, ditto with the liabilities. So I tend to encourage most people to kind of discount those a little bit. We know they exist, but it's not a true debt. Other than that, the only other adjustment this year will be on the solid waste landfill. Keith had brought to us, there was some discussion of kind of timing of the reports for reviewing the capacity and what the liability should be. As part of that, we kind of both went into the guidance and dug in a little bit and found a provision that says that should be adjusted for inflation year over year. So this year we went ahead and trued that up, brought up that liability for that inflation. So there's going to be adjustment there that you'll see for that effectively just says this is what the inflation adjusted amount should be, and that amount will be reflected this year. So those are the only two kind of items that'll look a little different this year. We also do single audit as well, your expenditures of those federal awards. There's only a couple of large programs, usually FTA and airport being the primary ones, as well as some COVID. So we identify what the major programs are. We test those, call those single audits. Those are clean this year, so we'll issue again an unmodified report. For those audits, they are technically a separate audit. And then we also do issue what's called an internal control report. It says, we go through and test the design of internal controls. So are there controls over who's approving purchases, over reconciling the bank accounts, all those kind of things. And so we test to make sure the design is appropriate, that there isn't issues in the design of it. We don't necessarily test 100 of the detailed transactions like you would see at a public company, but our procedures are designed to make sure that the structure of those internal controls is appropriate. So we did test all those. Again, just like prior years, they all looked very clean, no issues there. We try to kind of give best practices whenever we see them. The nice part about working with this team and how good they are is you guys tend to be our best practice. So we tend to refer to, structures like Kootenai, the review process, those kind of things. So that's kind of the rundown of what the financials will look like. To kind of touch on that again, I think we're at 6 or 7 years now for the audit, and consistently it's been one of the easiest, kind of smoothest communication audits that I've worked with. The team here is fantastic. I think Brandy's done a fantastic job of just stepping into a tough role to just kind of step into and understand all the complexities that's going on. So, I work directly with about a dozen governmental agencies, and Jody is actually in charge of our entire government practice at our firm. We both talk frequently about how much we enjoy coming to Northern Idaho and working on the handful of clients we have up here. And so express my appreciation for this team.
Bill, any questions?
I have no questions. Bailey seems to do a great job for us.
Okay. Bruce?
I was just kind of curious on the leases. How are you going to, are the leases considered an asset and then you just have a liability offset? And how's the liability calculated?
Yeah, good question. So the guidance effectively says you take the lease document, the legal commitment, and you project out for any potential renewals and all these things and kind of determine, okay, this is our expected period, so let's say 10 years. And you actually calculate a present value of that and say, our incremental borrowing rate is 4%, or I don't remember what rate we used, but we present value that. So the current, let's say it's $5 million over the next 10 years. The current value of that is $4 million. That's our debt. And then you actually have a right to use asset is what it's called. And so as the lessee in that case, we have the right to use that asset that is worth $4 million. We have a debt that is $4 million that we're going to pay out over the next 10 years. And then every year, both of those slowly decrease. The right of use asset gets amortized, the debt gets paid off to where it eventually zeroes out. So they'll almost always be the same amount. There's always a little bit of difference because you use interest rate on one and straight line amortization depreciation on the asset, but they're usually very, very close. So you usually see a big gross up of the liability and a big gross up of the asset, but very little impact on the overall financial position of the county. And then on the flip side, on the lessor side, like the airport.
Yeah,
If I may weigh in
Yes,
a little
please.
bit, just to let you know, the liability and then the equal offsetting asset that got created for the airport specifically was right at $17 million. So right now, the leases being collected are annually between $800,000 and $900,000, or what we collect in airport leases. But because of the long length of those, they're 25-year contracts. If you amortize that back to today, the initial liability we brought on was $17 million. So that just kind of lets you know the overall value of the contracts we have in place there at the airport.
yeah, no, I understand completely. I was just kind of curious. It's a little different, because it is an asset, but it's also counting as a liability on the books, and your revenue is depleting both as it comes in.
Yes, you are going to have, on like a lessor side, you're going to have an interest revenue portion, right? But a lot of that, it's going to be collected as part of that receivable rather than just recognized as revenue.
Yeah.
It's, I understand why they did it. I will say it's causing a lot of headache, particularly for users, because what average user is really going to understand all the dynamics there.
Yeah.
And so both on the lessee and lessor side, and then they complicated it, GASB complicated it by putting the lessor side on the fund financial statements themselves. So your general fund all of a sudden has a large receivable that's long-term, which has never really happened before. So there is a lot of confusion there in for-profit world too, as you have debt to equity ratios and these things you have to follow, and all of a sudden I have $10 million of debt that just appears on my books.
Yeah.
So it is causing a lot of havoc. I do have a lot of clients in the for-profit world that are having a gap departure because it's just not worth it for them. Their users
Sure.
don't understand it, and so it's easier for them now, more difficult to do.
And how do you determine the time value of the money?
You use the present value formula based on what the incremental borrowing rate is, that basically, in our case, would say, if we did want to finance this, 5-year asset or whatever, what would our interest rate be? And then I just use that. I just use the net present value formula that says interest rate of 5%, 10 years at X dollar amount. The current value of that is Y. So
Okay.
Excel has a wonderful formula for that. So.
I'm sure they do. It's precisely,
Yep, exactly.
Now, one last question. I'm sorry. Just, you mentioned something about an inflation-adjusted liability. Could you just kind of recap that again?
Yeah, so there's solid waste has a post-closure liability on the books for eventually what the eventual cost of, and you can probably give more context to it, but eventual cost will be to close and maintain that property. And
Got it.
so that had not been adjusted for inflation. And so this year, as part of, there's a new report that's coming out assessing what the liability should be and valuation of that. And as part of that, we were researching, how to deal with that, and then what the guidance says under this, and it says we need to adjust that for inflation, particularly in today's environment. And so that has now been caught up. So there's that liability, now you'll see an adjustment on there to bring it up to what it should be as of today.
Yeah. So.
I don't know if you had anything else to.
Yeah, I mean, if you want to look at would it be helpful to have the exact numbers? Because one of the things we'll be required to do is restate fund balance to essentially show this. So,
Yeah, I get the sense it's really just trying to anticipate a more realistic cost versus, just having a straight number there, and then all of a sudden that number is always smaller than the real world number, and people are kind of going, well, why you told me, it's going to be X, not X plus Y.
Yeah.
So,
no, that's correct. So
Okay.
inflate. The original cost study was done in 2012, and that cost study will be updated by Solid Waste next year. So they'll have much more exact costs for 2023's financials, and that comes in line with the engineering study they have on actually, how close to closure we would be on our current landfill. And that doesn't include all the, it will provide us a better snapshot in time in terms of our true liability and how close we are to both closure and what those actual costs are, so.
Yeah.
That's why it's so important for solid waste to do those studies regularly so that we have an accurate financial picture of what the true liability is. Because we will have to pay for that at some point.
Well, and I want to say that Ramsey, they are still dealing with post-closure stuff way after they expected to. So I don't think it's a lot, but it is some still.
Yeah, I mean, you're required to monitor the landfill for 30 years after closure. So, best practices would say you'd have that liability fully funded. So if you close what we have in place right now, that is now a $17 million liability to, both, that counts both the closing of the landfill as well as the 30 years of monitoring that would need to happen with that landfill. if it makes you feel any better, if we had a nuclear reactor, that closure, post-closure starts at $1 billion.
Wow. Let's not do that here.
Yeah. So, yeah, building that money as you go along is a little different, so.
Okay. Great. Anything further?
No, that's it for me. Thank you very
All right.
much.
Now, do we need to accept, we don't have an action item, so if you would like us to accept the audit, we can do that as a business
Don't
meeting.
have an action item, no.
Okay.
I do want to kind of bring forward as a discussion item.
Okay.
We are at the point where we need to do another 2-year contract renewal with Ide Bailey. So with board direction, we'd like to go ahead and have them give us a quote, what that would be, just as we're about to enter budget season. And that does fall under the board's budget.
Sure.
If you're okay with that.
I guess my only concern is I appreciate the working relationship, but then how many years do we use the same company before we really need to step off and have fresh eyes and do that kind of thing? So,
Right.
and no offense at all, because I mean I'm happy to just keep moving, but I think transparency and kind of all that. So when is that balance? I mean, do you
I
have
will
a
say that we usually maintain the same leadership, but they do have new staff pretty much every year. This year we had a new manager. He's not here today. Well, I don't know if he's the manager or staff, but David, and he actually provided a lot of great insight into this solid waste discussion we're having.
Okay.
He was the one that kind of brought that forward. So they do rotate some staff, but it is up to the board. If you want to do another 2-year renewal, go out for RFP. It's up to you.
And I will just chime in real quick, just because government is our largest practice at our firm. We have this discussion a lot. We've started doing a lot of them is we'll actually rotate the management team itself.
Okay.
To bring in, that fresh set of eyes. So whether that's someone, from our Boise office, from one of our other offices, when you have a partner manager, to bring in a fresh perspective that hasn't been on the audit in the past. So that is an option moving forward.
Okay.
How many years now have we been working together?
I believe this is the 7th. So what we did an initial 3-year, and then we've done two-year
Two-year.
addendums. So
Right.
the math on that works out. This is the 7th year of Ide Bailey's contract.
Yeah. I agree that having a set of fresh eyes definitely helps. How we get about there, I think is not quite as important. Just if you have a management team that's completely fresh, you've hired them within the last couple of years, they've never looked at Kootenai County, that probably wouldn't be a bad way to go.
So can you write that into the proposal or the contract? Okay.
Yeah.
So Bill, thoughts on that?
Well, I'm not really interested in, but I do think it would be a good idea to kind of take a deep look at what's going on and maybe without any prejudice do an RFP.
Okay, so I'm probably comfortable now just coming forward with the contract language that says that you will have all new, staff look at the book. So what do you want to do, Bruce?
I'm fine with that,
Okay. All right.
Okay, we'll do that.
Okay. All right, you've got direction and public comment. Nope, nobody online, no one. Okay. Well, it is 11:18, meeting adjourned. Thank you for coming.
Thank you.